Hey guys, I hope you are well. I am doing absolutely well. As you can guess, it's pretty cold in Johannesburg. So this cold front that's come out of nowhere, a cold front for us is when temperatures drop to single digits. That's pretty cold. What I want to just do today, I've left my settings, which I had on yesterday's charts open. Just I want to show you something quite interesting based on what took place yesterday on both the gold and euro. So this is today, gold daily. My apologies, my timer is still going. Not sure why. I'm going to put it on silent. Okay, so this is today gold. This is yesterday. So I want to look at what happened on that particular day. This is yesterday. So what I have with my green horizontal, that's high of previous day, and the red is the low of the previous day. So let's just move the open will be about plus or minus there. Okay, so we're gonna go through that and just have a look and see what's happening. Excuse my bad manners, guys. How are you all doing? John, how are you doing, my mate? I trust you well, and I trust the trading is treating well. Any of the other regular guys that are on, just say how's it, and let's have some fun. I'm all good. I'm all good. So we're gonna have a look at that. Let's just pop back to euro. We'll look at euro a little bit after the goal, but this is today. So the doji candle where we're in on the day so far. This is yesterday, the bear candle, and low of previous day, high of previous day. So we'll have a look because there's a few things I want to show you, which I think will assist you with price action trading as we go forward. We're starting to see things as they fold, as they unfold. So we'll just work with that. Okay. Yeah, John, just ask me a question as you go along. Maybe I can help with that. I like that. You're testing some levels to see if you can get the right entry. So as we talk, I can ask a question and I'll try and clarify a few things for you. Spend a lot of time talking about what's happening in this last week, so I'm not going to dig into that. I want to have a look at yesterday. So we're going to jump straight in. Gold. Have a look at what happened yesterday in the 5-minute time frame. We'll come and have a look at what's happened to us. There's a few things also interesting there. Okay, so this is today. This is yesterday in gold. So you would have come into the market. So let's just put some of it. So you would have come in, you would have marked your high of the previous day, you would have had your low of the previous day, and very key things to mark. And you're trying to find out to get into the market. That's the whole idea. And remember, what I've said is when you look at the market, whatever time you come into the market, whatever session you come into the market, really it doesn't matter. You've always just gonna get a sense of what am I seeing, what's being presented before me. Okay, so without going too far back in the previous day, you could see we're in a tight trading range of sorts. So in the present day that you're looking at, you're gonna start to see and say to yourself, well, at what stage do I want to get into the market? So here, as the market is opened, okay, so you have a high at this present moment and you have a low. Okay, very important. So so far there's no, I mean, market could have gone up there. That would be a different story, right? But so far you're having a look at that and you're saying, well, it's going sideways. It's a trading range, but there is no way for me to get in and trade. You know, it's not going to make sense for me to say double bottom. Let me take a trade here because I'm just going to go up to that level of resistance. That's where you're going to take your early profit. So you know you want to wait for clarity and just hang around. You know, if you wait to see what happens, if you're looking at two kind of charts, well, why don't we do it? Let's try that and see what happens. So you know, let's say you're looking at gold and euro. Let's just go to euro quickly. I've explained what we've marked so far, so let's go down to the 5-minute time frame. So you'll have those two before you. So this is today. Okay, so you wanna go. We're going back to yesterday. Before the 15. Oh, it's right here. So okay. So at the same time that you are looking at gold, you would also be looking at the euro. And you kind of saying to yourself, I've got to find ways to get into the market. You know, I'm going to see if in this session there's an opportunity for me to jump in. So in this particular market, on this market that I'm looking at, this chart, there's a low there. You know, so you kind of waiting to see what happens. You know, we're breaking above that. There's a high there. You know, and before you get any pullback, you get that huge back candle. So okay, so there's a high, there's a low. There's nothing for you to trade. You can't sell that to get there. There's no setup. So you've got a high, you've got a low, you've got some form of a trading range. Now, you know, you could be here. So you just plunk it out and say, well, I got to wait to see the market breaks beneath that, whether to give me a measured move to down here, if it goes above that, whether I'll get a measured move. These are some of the things that by now should just be becoming pretty common, right? So at that point we say, well, that's interesting. I mean, that there is no noise as far as price action is concerned. You know, there is no such thing as noise. There is information that we continually getting. So clearly you'd say, oh, hang on a second. This price action here is an area of agreement. But both sides are saying if we break beneath this level here, and the beds are strong enough, they're gonna, the measured move is to get to the low of the previous day. So that's the magnet. But if the bulls are strong enough, you know, the magnet that's gonna pull the market up, you know, is this measured move here. That's where you know they wanna go to the high of the previous day. So high and low pretty significant, but still you're not trading. Then you see that attempt by the bears to break up, and clearly, let's just clean this up. There is the first attempt to break beneath that low, and it fails. Information has been provided to you. Bears attempted to break, but they failed to break, and they created a doji. So doji is a 1 bar, 1 candle trading range, and no sign of bear strength. Bears do attempt to resume again, but they can't even break beneath that low. So immediately saying that perhaps the bulls are strong enough. Okay, this time, you know, on my platform is 420, and I'm kind of here with gold. Okay, so I have a doji that's been created there, so that creates for me another high right there. Okay, still, I'm not taking any trades because nothing is set up for me, but that is pretty exciting. Bulls attempt to close, get above that, fails, bulls return to the market. failed to break out above that, bulls again resuming, and then there'll be strong 1 bar breakout above the high of yesterday. And ideally, we want to see a breakout candle. We want to see follow through to say, hey, this is fantastic. Let's jump into the trade and start trading. But to get a 1 candle, 1 bar breakout, which is still significant, okay? But for a confirmed breakout, you always want to see follow through. So we're going to just watch and wait. We're going to jump into any trade. Because what's happening there, this is we're right at that level of the measured move, out of that trading range. Okay, so that breakout gets there. I didn't get my follow through, so I'm kind of saying, well, okay, good, one strong candle, but why won't the bull strong enough to give me a follow through? So I'm going to wait a little bit and see. I get a pull back to the 10 EMA, but I'm not trading it, okay, because I'm hesitating because I didn't get the follow through here. And when I get the pullback, which tests the breakout above the high of the previous day, I get a bear candle, and I'm kind of saying, well, if the bulls are strong enough, give me a decent 2 bar reversal, and I don't get that, so I'm not taking that trade. There's really no need for you to take the trade. It's a high risk, likely to fail trade. Now, if for any reason you are tempted to take the trade, because we're talking probabilities and you're in it and maybe look in the future, say, hey, listen, I'm going to take it 1 bar breakout, come back to the EMA, I'm going to put my order above that. I wouldn't do that, but if you did that, the stop is going to be down here. That is the correct place to put the stop. Okay, so you kind of look and say, well, I'm not taking that trade. Where am I with the euro? Okay, so we've had this failed break beneath this by the bears. And then we have the bulls resuming. So we still got that high that we're marking. Failed break. Okay, then we have what 3-6 bull candles getting to test the high of the trading range. Okay, that's the high of that trading range. Then right at that high, so any bulls who initiated trades, we're not initiating trades at this particular stage, but if you initiated it, you're going to be looking to, I'm just on the map now. You have to take your trades there because you're trading a trading range from the low to the top. Okay. So that's why we've got a bit of pullback there. And then now, this is what gets interesting here. Okay, we don't get any breakout here. We get a pullback to the 10 EMA. Now, we are in a trading range. The fact that it kind of goes up after the fact, it's something to observe. But at this point, we are in a trading range. Okay, if you're in a trading range, what you're looking to do is sell as high as you can and take your profits at the bottom. Okay, when you have a cleared at the top, you get a lower high, you can sell, and then you can buy at the bottom, and again take profits at the top. So you get this pullback to the 10 EMA, and your mindset is thinking, I'm in a trading range. I'm not going to initiate trades up at this level, so I'm going to have to wait. And then guess what you get, right? Okay, at the top of the trading range. We get a breakout, not very good, but we get a follow-through candle and another candle. Now that's a decent enough breakout above the trading range. At that stage, your measured move is still saying, well, if I do get a breakout above this trading range, I'll get to there. But now I do have a low here, and I have a high here. So the market is creating all of this, and the magnet is to say, if we break above this, we're likely to get to that level. So at that stage, you haven't taken the trade because you're at the top of the trading range, but you get a breakout and follow through. And you say, okay, now if I get a pullback at this particular point, then I'll be happy to take a trade to get to that measured move. But we don't get the pullback. The market continues, goes sideways, or I use the term sideways, but as you can see, it's a pullback, right, to the 20 EMA, but still no clear setup for us because we'd have wanted with this breakout a decent enough pullback to the 10 EMA. If we'd got this kind of setup here, somewhere here, we'd have taken that, stop here, trying to get here. Okay, but we didn't get that. And then let's just go 535. Let's go back to gold. Okay, so with gold, we kind of looked at it and said, well, that's created a bit of a problem for us. We really would have loved if that had been better follow through and the pullback, but you can clearly see the market is going up. Now we've got to start to think, okay, I've got to find ways to get into this market. If I didn't like this setup, that's fantastic. Low probability setup is carried on in the direction. That's pretty fine. Now, where is the breakout point? Breakout point is here. The market is broken out above that. There is follow through, and it's coming back. And you want to see what happens now at the 10 EMA. You haven't seen all of this stuff. You've kind of said, okay, at that level, not a surprise. It's a measured move of this trading range. We've broken above that. Yesterday, we've come back. Yes, we've tested the breakout point. Didn't give me an entry to get in. Then I have breakout above that. Tail, bit of a problem, but I could follow through. Doji, follow through, pull back. Okay, fantastic. The market is going up now. Where is the market likely to go? That's where now you got to start to put some of the things together. So clearly, well, let me not say clearly, but this is a first leg breaking out of the trading range. Okay, pull back, and it's likely to get a second leg. So we've got to start putting some of these things in. So where would the first leg have started? First leg started somewhere within here. Go to that. Okay, this stapled. And first leg, pull back, go to here, and there is a second leg. Okay, so no surprise that there is that kind of a reaction taking place there. Then we got the breakout. Now we got to think, okay, is this the end of this particular move? Do I have is that my trend line there? Okay, yes, we have a trend line. But have a look at what's taken place here. Do you see their strength? Okay, do you see a strong break beneath this trend line? Remember when we spoke about major trend reversals, we need to see a clear trend. Could argue that's a trend, yes it is. But you want to see a break of the trend line. Do we see a break of the trend line? No, we don't. Okay, the attempts at the 10 are repulsed. This tells here, bears trying to create the break beneath this, lower high, continue downwards. But there's tails, which means there's buying into the close, buying into the close, buying into the close, and the closing above the EMA. So you got to say to yourself, well, if I see that and there is weakness there, could this be one leg which has two parts to it, in which case the market may continue up a little bit more? I don't know, but I don't see any bear strength. So I'm going to look at this and say, okay, this is a good sign for the bulls, but I'm not going to take my trade there because leg one, pullback, leg two, profit taking that at that level. Yeah, bears are failing. If I look at each of these candles as they are forming, these tails are telling me that bears are failing to close beneath the 10 EMA. They are failing to close beneath the trend line. And chances are they may just go sideways. They may not close beneath the 20 EMA. So the bulls are still in control, but I'm not taking the trade. I'm just saying, okay, that's a good sign. Let me see if I get another opportunity to go into this trade line. So you observe that, okay, you don't take that trade. If you do take, and I gotta keep saying this, if you do take the trade, the most important thing whenever you take the trade, because you don't always want to aim for 100% clarity. Okay, sometimes you may say, listen, I think I'm going to take this trade. The moment you're saying that to yourself, you've got to ask yourself, where is the technical position to place my stop? Okay, don't go taking the trade there and putting a stop there. That is not the correct technical place to put your stop. Okay, if you're gonna take that particular trade, your stop has to be here, and that's the optimal stop to put in. Okay. Extremely conservative down here, but there is a place to put your stop. Okay, you wanna take that, put your stop there for whatever reason. So, you know, it's okay if you decide to take that trade. You know, size it correctly. Use your calculator. That's a 35 pip stop. Okay, put the entry there. That's it, and see what happens. If you haven't taken that, but you know, okay, I've got a bullish mindset. I gotta see if I get another opportunity to take a trade. There is another opportunity to take a trade. That you could take a trade. Okay, that's an inside candle right there. So you could place your order above that. You could trigger that there. But still your stop is not here. Your stop is here. There is a correct place for the stop. Stop always has to be at the correct technical position. I cannot ever overemphasize that. Okay, it's always got to be at the correct position. I mean, if the market turns and you get a big bear spike, you stopped out, fantastic. But my stop was at the correct technical position. I've sized it correctly. Okay, so you would you put your entry there. Now, if you did that, you are now, your mindset is saying, all of this could just be the first leg of a bigger move. Okay, all of this stuff from here to there. There's a pullback. So you are saying all of that is the first leg. There is a pullback. I'm expecting that the market may go to this to that extent. Okay, that's why the most important thing for us is to put our stop at the correct technical level, because if the probabilities are in our favor, 60% chance the market moves in a direction, you know, we still make our one-to-one. If you're taking that there, 36, 1.5. Now, if you haven't taken any of this and you're still thinking, okay, bullish, until I see, now, let me just emphasize, until I see a close beneath the 20 EMA. Remember, when we're talking about breakouts, I said I used the 10 EMA to indicate the strength of the breakout. So if I get a strong breakout, bullish, or strong breakout, bearish, when the market comes back, pulls back to test the 10 EMA, and I get a bounce off the 10 EMA, then I know the breakout is strong. Okay, if I get a close beneath the 10 EMA, I'm not changing my perspective. I'm not changing my thesis that the bulls are strong and the bears are strong. Until I get a close beneath the 20 EMA, I'm going to hold on to whatever argument I have, like right now, that the bulls are strong. So if you didn't take any of these, you got to wait to say, okay, let me see what happens with 20 EMA. Okay. Are these, so this was our, remember this was our breakout point here. Market came back, did not even go beneath the breakout point. And we can always just flip through to have a look at our lows. So that's the low that we have when the market resumes. We're trying to take a trade. There's our breakout point. So you can see, I mean, the bulls are quite strong. They're defending the breakout point. Okay, they're defending the 20 EMA. So you could have gone into that and say, okay, happy with the double bottom, always want to see the pattern double bottom and look for the entry after that. Happy with that double bottom at the 20 EMA, I've got to find ways to get in. Okay. And maybe you hadn't seen all of this before. Now you can say, okay, what did I miss? Maybe I missed that. That's actually one leg. And this market going back to the EMA, it really is a pullback. You say, oh, okay, so actually that was the first leg. That is a pullback to the EMA. The first leg had first leg and second leg, we pull back to the EMA, we start to double bottom in it. Oh, fantastic. So I've got to find ways to get in. Maybe I put my order above that, don't get triggered, take it off, wait again, put it above that, don't get triggered, take it off, get in at that point, because you can see, now you're starting to see with information that's been provided to you bar by bar, candle by candle, that this is just a pullback to the EMA. So you can still put all of these if you hadn't put them in and say, like, okay, the market does now move beyond this level. It's likely to get there. So all of this would just be a pullback to the EMA. And you're trying to find ways to go there. So we kind of at 710 and we come back and, you know, we're looking at a couple of charts at the moment. And this one is okay. So remember that trading range that we're talking about, and we didn't take a trade here because we're at the top of a trading range. We think, hey, I might get a double top, low, high, but the market does break above that, break out and this follow through. And now you're just trying to find, well, how can I actually get into this trade? Because that's a magnet that's up there. And I've got to find ways to get in. And it doesn't really give you a clean entry. All of this doesn't give you a clean entry. You could even plonk in your closes and, okay, I don't want to force this. I want to jump into it and force it, but I'm not clearly seeing what the market is giving me. Then I get this bear candle. And I'm saying, oh, okay, so maybe the bears are coming back. They're trying to create a double top here of sorts. Maybe they're just looking at this pullback and saying, well, let's take profits, let's defend that. There's my close beneath the moving average. If I get follow through beneath this, then I'm saying, okay, maybe the thesis has changed. Maybe the bears are now in control of the market. But it turns out to be just a test of that breakout point because there is no follow through by the bears. Okay, we have the bulls coming in, test of the EMA, the bears attempt to resume, and you saying, okay, the bears are strong enough, all the way I give me is a couple of follow-through candles, and I have the double top, just went for lower high to trade this, but I don't get that. So the bulls are back in control. Now you're looking and say, oh, okay, maybe this was just a test of this breakout point. So I've got to find ways to get in, try and get into this. Now there is a test. So I take any trade, there's a place to put my stop. So now when I see it, I got to ask myself a question. Am I prepared to take a trade above that? Stop down here, call it 10 pips, and maybe make half a percent. Okay, maybe 2/3. I would say fantastic, take it. Okay, you don't have to take it if you're trading 1% risk. You don't have to trade it the full 1% risk. You can trade it at 0.5%. Then you make 2/3 of 0.5%. You know, throughout the day, might pick up another third day. You end up with 1-2% in the day. But when you see that, you know, you've got to put the trade in the market. You know, put above it, but just stop always has to be at the correct technical position. There is no other way. Do not put the stop there. Okay, maybe at some stage we'll talk about stops and a little bit more about technical positions. But until then, you gotta clearly see. Don't avoid tight stops. You know, I've done that, guys, and it's always like, wow, when it works in your favor. It's like, look at all of this money I made. I was only 5 pips. I ended up getting out there. I mean, that's beautiful, 4%. But that's the wrong place for the stop. Stop has to be at the correct technical position. When you break above this, okay, break above that, and market pulls back, then that becomes correct stop. So we've broken above that, we pull back, that's correct stop. So very important. So you could have taken that trade, and that's where you want to take your profits. Okay, so you have gotten here and you have been stopped out in terms of that's where your take profit was. And then you see that and you say, oh man, what happened? Why? Why did I get out of this trade? I've just broken above the high of yesterday. So what do you do then? So here's the thing. If you're not trading breakouts, which I haven't spoken about, I have spoken of trading breakouts in terms of get the breakout, get the confirmed breakout, get the pullback to the 10 EMA, and let's look for a trade, or that fails, look at the 20 EMA, double bottom, double top, whatever. That's trading the pullback from the breakout. But if you just trading a straight breakout, there's ways to trade it. That's a different subject we'll look at some point. But yeah, you could trade that, stop at the correct place, and you got to figure out where am I going to take out my profit, etc. But we're not talking about that for the present moment. So you'd have gone out your 2 trades and observed that. Now, what would be going on through your mind? You're saying, okay, fine, I got out of here, banked some profits. It's still profit, still money in the account. So now I have a breakout of a follow-through candle, and George will be very happy. What are we looking out for? And we are at about 925 with a breakout. Okay, let's just talk this before we jump back to gold. This is where it gets interesting. So you kind of say, okay, I gotta wait for the 10 EMA, and you are absolutely right. You have to see a breakout. The first thing is look out for the 10 EMA, because all you want to see market pulling back clean to the 10 EMA, giving you a decent bounce off the 10 EMA. Put your order above the 10 EMA, in this case above the reversal pattern. Then your stop is going to go in the correct place, beginning of the breakout, and you would have been saying, well, okay, let's assume we got that move. You would have been saying, okay, measure move of the breakout, and I need to take my profits there. And if it had turned nicely, leg 1, pull back leg 2, decide where the optimal levels and take your profits up. But look at what happened. This is why I found this so fascinating. We did not get any bounce of the 10 EMA. Because what you want to be seeing, guys, what you want to start to observe is, okay, I do get the breakout. I want to see a very clean pullback to the 10 EMA. Why? Because you got a breakout, there is some profit taken, but the trend, the breakout has to resume. Instead, we got a doji followed by a doji, got a bear candle, inside candle, no resumption. If it was the pullback to the 10 EMA that we're looking for, at this bull candle, this bull bar, market should have resumed up. Or here should have resumed up. But you have 2 bull candles, 3 bull candles, the market is not resuming. So even if you said, okay, I'm not bouncing off the 10 EMA. You gotta wait for the bounce of the 10 EMA. So we wanted to get to the 10 EMA because that's our speed indicator, our strength indicator for the breakout in the market to resume. So we don't get that question marks should be forming in your head. Why are we not getting a clean bounce of the 10 EMA? So don't get caught out in the headlights. Just to observe and say, well, I'm just going to trade, I'm just going to trade. Don't get caught up in the headlights. If it hasn't bounced off the 10 EMA, and even if you kind of said, okay, I'm not quite clear, there's a 10 EMA and I put my order above that. If you're not triggered, take it out. It has not bounced off the 10 EMA. Okay? Then what do we have to do? In our mind, we're saying, okay, there's something wrong with this breakout. It is not as strong as it should have been, because if it was a strong breakout, we already been rocketing up on the 10 EMA, but we don't. So let's wait to see what we get when we get to the 20 EMA. First attempt of the 10 EMA, small tail. Second attempt, it was a bear candle at some stage. Then the bulls bought and created a bull candle. And you say, oh, okay, let's see what happens in the next one. I mean, that's a very dodgy candle. Even if you put your order above that, stop here, you're not going to have a trigger. Okay. Then we get a bear candle, and we're like, well, we're getting problems there. What's happened to all of this strength? We failed to follow through the 10 EMA. Creating all these dodges, creating a bit of a trading range. You get to the 20 EMA, we get two closes beneath the 20 EMA. They say this move is erasing all of this bullish strength. Okay, there's all this information that's been provided to you. Okay, so at this stage, your whole thesis, your whole argument about a strong breakout has been eroded. So you should at least be thinking trading range. Okay, because that's been eroded. Two closes, then you get this, and maybe say, oh, okay, maybe that's a test of that breakout point. So maybe there will be a resumption. Okay, that's a test. Maybe there will be a double top, double bottom, and resumption. So let's see what happens. But we're still beneath the 20 EMA, still beneath the 20. Follow through, and immediately we have another bear candle. So at this stage, you still say trading range, maybe it's going to be a micro double bottom. That's a double bottom with a couple of candles between the two bottoms. Maybe that becomes a double bottom. Maybe that becomes a bull candle, which would be fantastic because we might have a breakout out of that, then a higher low, and then boom, off we go. Okay, but still in a trading range. With all that exciting news, let's go to the gold and see. So now we're like a 1035. Okay, so remember here playing around with your mind a little bit today. So you kind of said, oh, okay, now I see what's happening. Now this is now the inside. That's supposed to be leg one, pullback, leg two. So I've got to get into this trade. Now, if I haven't taken any of this trade, I haven't taken any of my stop is still at the correct level. Okay, if I haven't taken any of that, my stop is going to be there. And I haven't taken that, I'm still at the bottom. I haven't triggered there, I gotta wait, I haven't triggered there. I gotta just take a trade. I mean, clearly means 60%, guys. Clearly 60% of the chance it's gonna go up. There's never 100%. But I have to get into the market because I'm seeing a leg one pullback. I've gotta get into and get to that level at least. If I'm a little bit unsure, put half of the risk that you usually put in the market. Okay, put your stop here, put half of the risk, jump into the market, and try and get to that level and see what happens. Okay, because now your whole argument, your whole thesis, leg one, pullback, leg two, but you're also not ignoring this trading range that's forming here. Okay, and you kind of say, well, at that point, I might get some kind of a pullback, profit taking, because although that's leg one, pullback leg two, there's still a trading range here, and maybe that measured move is where the market just wants to go. So you gotta get in. You really have to get in. It's not perfect. It's not clear. You could have left your entry there to see what happens. Fantastic. Could have left it in there to see what happens. Could have taken them out or taken them in there. but get it and try and get to there. So we then get all of this. There's no reason for you to get out of the market here. If you started to have the bear candle, then the follow through bear candle, and another one, then you could get out and make a little bit of money. But so far, not the cleanest of breakouts above the trading range, but bull candle, bull candle, bull candle, bear candle, bull candle, pull back to the 10 EMA. What do? Okay, you're looking at your bar count, your candle count, and you're kind of seeing the market is going up, but it's not super clean. And there is your profit taking level. There isn't much left. But you see in that and say that's pretty decent. With a strong bull move, if I take that, my stop has to be here. Okay, it's 43. If I take that, if I go there, that's 22, 20, so that's only 0.5. Don't put your stop here. That's not the correct place for the stop. Don't put it here. So I would take that. I mean, it's a 0.5 return or 0.4 return. That's still fantastic. Take the trade and see what happens. When you take it up, all your profit there, you take it all off. You've gained 0.5, whatever. It all adds up to what's happening in the day. Then, of course, you're taking a profit, and the market goes a little bit sideways. So we're still not yet on the same time as euro. So still a lot of interesting things happening for you. Let me just do this a little bit. Okay, so there's your profit taken, measured move, leg 1, leg 2. So take out some profits, take them all out if you want. There's absolutely no problem with that. Then the market pulls back. Now this was your hidden level of resistance. Okay, market is pulled back to the 10 EMA. What do? Are you going to take that trade? You're right at the profit taking zone. At this stage, I don't take any further trades. If you are holding on to any more profits to see how far you go, fantastic. If not, just wait and see, because we have reached the measured move that we're looking at. We've taken a decent trade here, 0.5 return, still fantastic. It's exactly taking out your profit exactly there. So we're getting sideways price action. Now, how strong are the bulls? I've got to ask myself right now, because now we've got all of these things taking place, and it starts to get a little bit more interesting, because you're saying, hang on, we're still holding above the 10 EMA. Could this whole move, that had 2 legs, could this all be one move, and you're going to get a huge prolonged pullback to the EMA, and then a second leg? Now you're starting to think think of nested patterns within patterns, and because you're trying to find ways to stay in the market, to stay bullish. So you can say to yourself, possibly all of this could just be one move. Let's think like that and see what it shows us. Maybe all of this, okay, all of this, and whatever pullback we get, that could be, all of this could be leg 1. It's one leg of a larger move that's broken up into 2. Okay, so question to ask myself, will the market get there? Market didn't quite get there, but the thinking was right. The thinking was not flawed. Let's do this. Because you said maybe all of this is just one leg, all of this move here, and the market pulls back. Maybe actually pull back. So we didn't get to that, but it's still giving you still got to find ways to say, listen, can I get into this trade? But there's something else here. You could also say to yourself, hang on a second, George. This whole thing, like you said, could be one leg. So that's a big trend that's formed, leg 1, pullback, leg 2. So if that's my trend line started pullback, the market has to break beneath this for me to start to think that the bears are strong. Okay, if that's my trend line, then all of this is not for me a sign that the bears are in control. All of this is simply profit taking. That trend line has to be tested. Okay, are the bulls strong enough to defend that trend line? Let's do that. Okay, let's keep an eye on the time. So here we are. There's my trend line. Market breaks with the trend line. I know if I get a major trend reversal, what is likely to happen first? If you get a break of a trend line, the market has to test the prior high in a major trend reversal. So I'm kind of thinking, well, the market might have to test that. So let me see if I can find ways, if I still have the appetite to trade the market, or I can wait to see what happens at that level. But look at it. Why not look at and see if there's ways to trade it? Here's something else interesting: closes. So the market is testing that close at the same time. But the most important thing that we've spoken of before is we are in a trend. There's a trend line break. That's a moving average gap bar. It's testing that. You don't have to take that if you're not comfortable with it, but you know the market is likely 60% chance to test that high before it goes any further. So you could take your trade above there. And if you do take your trade above that level, you can put your stop here or your stop there, and you're aiming to get there another fraction, 0.5, 0.3, ending up as we progress through the day. But now we have a trading range. Guess what? We do see a trading range. And are we surprised? We're not. We're saying, okay, we're at a trading range. If the market breaks above the trading range, where is it likely to go? It's likely to go there. Is that a surprise? It's not, because maybe that whole move that we marked, that's a magnet that could pull the market up. So if the market breaks above that, it's likely to go there. So the market does break above that, pulls back, doesn't give us a clean enough entry for us to be worrying about. At this stage, if you wanted to take that trade, stop. The most important thing is always the stop has to be at the correct technical level. To be down here, huge stop, but again, fractions. So by now, I think probably have 1.5 or 2%, whatever the case may be. In any case, we well into the US session at this stage. The bulls failed to get to that level. We then come back and have a few close beneath the moving average. We have a lower high. We have that lower high. We're not trading that lower high. That's our pattern. Now we want to look for ways to go short. There is a way to go short. If you don't take that, there's a couple of ways to go short into the US session. But let's jump back to Euro. Okay, Euro is clearer than gold is, but still, you can trade gold. You may have to wait a little bit if you're not comfortable with all of this. Don't jump into stuff that you're not comfortable. If you take any of the trades here, stop has to be at the correct technical level. There is a stop, gold, which stop. Okay, then of course you gotta kind of say, well, measured move, if you break beneath that, how far do we go? And you would have gotten there, or if you didn't take that, but you took that kind of trade there, okay, and there's the first trade, 0.5, or you're gonna wait leg 1, pull back leg 2. And the whole move is the first leg. There is a pullback and trading, likely to get there rewarded nicely. But look at Euro. So we're talking, we're here. This is now in the US, UK, European session. Okay, so then you see this here. Remember we said here, you could have thought, oh, maybe we're going to get a double bottom. and then a resumption. So you wait, but then the bear breakout beneath that, wait for the pullback. So you've seen those two closes, pullback, bear resumption, pullback, decent test of the 10 EMA, inside candle that you gotta take. You gotta take that and stop either here 12 or right up there 20. Okay, and we're likely to go trading range. That high, that low. When I get there, test the open of the day or test the low of the previous day. So that's the trade you have to take. You've been making fractions throughout the day. There's a decent trade that you could take. Even if you took it off there, it's just over 111. Strong bear breakout. You can't ignore that. We get here to the low of the previous day. We close beneath the open of the day. So strong bear breakout. What is likely to happen? If you take it from there, that's your breakout to where it ends. So you kind of saying to yourself, well, if the bears are strong, they're going to follow through to get to that level. So if I see a decent enough pullback, I'm going to trade it. So there's a pullback, you want to trade or trade that inside candle that pulls back, test the breakout point, resumes, pulls back again, you can take that, and you're aiming to get there. But you can also put leg 1, leg 2. So that could be leg 1. There's leg 2. So you hop in the market gets down here. Okay. So you take a trade and you don't get there. You come back to the EMA. Now, 10 EMA indicator of strength, 20 EMAs will make a decision to exit out of trades. So if you'd taken first trade was here, don't worry about I think it's about building positions, can do that. So let's not worry about that now. You could have taken that trade there, you could have added in here or added in there, aiming to get there. Markets does to do that. Okay, remember, trend line. Breaking our trend line. What do we expect after a major trend? That the end of the trend, the extreme of the trend is likely to be tested in a major trend reversal. So you got a choice. The ideal thing once you've taken that trade and you've seen that trade, or there was 2 trades in, and you see that happen, just wait to see what happens, because it's likely to be a test, 60% chance. It might just go back against you, which is fine, because I'll talk to you about where your stop would be just now, about a few minutes to go. But hold on to it, because you're expecting a test to come in, and there's nothing in here that should cause you to panic and get out of your trade. Like you're gonna go sideways, you see all of that, and you do the usual stuff. I break beneath that, I'm likely to get there. Okay, no surprise, because I'm expecting that to be tested. Kind of gets tested later on, so you can take your profits out there. I want to just talk about stop quickly. Okay, so you've taken your entry there, stop here or stop there. When you see this breakout form, you've got to wait for the pullback to the 10 EMA to see the strength of it, or the 20 EMA, and for the trend to resume. When the trend resumes and starts to close beneath that, then you can pull down your stop. From there to there, you can tighten your stop to that. When you take a trade here, before it creates new lows, the stop is still up there. But after the market has created new lows and starts to pull back, you can tighten your stop to here. So you have locked in some profits. This will be in a little bit of still in profits here, but you come back, got a bit of a loss here and there. But your stop is safe. Okay, and you can also see it's just above the high of this key level of support, now resistance. Okay. So take your profits there, because you're expecting that to be tested after the trend line break. And now you got to wait to see what happens. Market breaks out beneath that poor follow through with the bulls trying to resume. We have a lower high here. So you're going to the US session with a lower high, and like, oh, fantastic. That's lower high. The whole bear trend coming down from there. So I just got to find ways to see if I can get back into this market. You know, if I do get back into the market, how far is it likely to go? You know, so there's my setup. I will just find ways to get in. Where would I get in? You could get in there, or because you're trying to get down there. But eventually it goes sideways. So yeah, if you hadn't gotten out, probably just gotten out there. And gold. Okay, so you know, we kind of spoke about that, but you're going to end up, you know, the market kind of goes sideways. So if you hadn't taken your profits there, the market starts to pull back, and then at the end of the day, you know, you might lose a bit of profit if you held on to it, but still would have been a very good day. So guys, I thought I'll just share that with you. There's some really good insights from yesterday. Just showing you the two markets, so you can jump between the different markets that you're looking at. We have three markets. Markets really doesn't matter, as long as you just keep a cool head about you and just go through it steadily. Ooh, it's a big message to even look at. Okay, I'll look at him better. Look at our day. You can't even look at anything there to make any sense because of everything that we marked on it. But in any case, let's move this study. So today so far, in the euro, is not interesting. So whatever you'd have looked at is just in a beautiful trading range here. Nothing much to do. Let's see. 25 pips, very difficult to trade that in terms of just the spread that you have. The gold, a lot more opportunities today, bullish, that would have looked at. Let's have a look at the quick questions. Okay, John, I'm trying to pick the right entries of the US so far. It's going to, how can I send you my charts to look at? What you can do, just before we close, just pop a question in, not a question, go to the chat box and just send my or Angel your charts, or just ask them to give you my email address. You guys can do that in the office. You need to route everything through them so they can see how we do. But I'm very willing to help you guys. So just get in touch with the guys in the admin office. They'll give you my email address and send me your charts. Tell me what you're looking at, and I can come back with comments and see how I can assist you. They are only practice days. That's fantastic. Let's have a look at them. You gotta get it right, and you gotta jump into the proper trading. All right, John. Thanks for that. Thank you, guys. I hope you enjoyed it, and we will be in touch. See you next week. Take care. Thanks, guys, in the office. Sincerely appreciate it.